The aviation world was rocked by a dramatic announcement that sent shockwaves through the industry. Ryanair, Europe's largest low-cost airline, threatened to cancel a massive $30 billion order with Boeing, a move that could have far-reaching consequences. This high-stakes deal, which covers hundreds of new aircraft, is not just another contract, it's a lifeline for both companies, shaping their futures for years to come. Ryanair, Boeing's biggest European customer, has built its entire business model and fleet strategy around the Boeing 737, making this partnership critical to its operations. The public warning came from Ryanair's outspoken CEO, Michael O'Leary, who didn't mince words as he cited rising prices and repeated delivery delays as the main reasons for his frustration. Boeing, still reeling from the aftermath of the 737 MAX crisis and grappling with ongoing production issues, now faces a major test of trust and reliability in the eyes of its customers and investors. If Ryanair walks away from the deal, it would send a powerful message to the market that even Boeing's most loyal partners are losing confidence in the manufacturer's ability to deliver. This isn't just a business spat, it's a very public showdown that could shake the entire aviation industry and set off a chain reaction among other airlines. The timing couldn't be worse for Boeing, as every single order is vital in a post-pandemic market where airlines are still recovering and competition is fiercer than ever. The collapse of this deal could have a domino effect, impacting aircraft prices, delivery schedules, and the competitive landscape for years to come, potentially reshaping the balance of power in the industry. For Ryanair, the threat to walk away is more than just a negotiating tactic, it's a sign of deep frustration and a willingness to consider alternative aircraft suppliers, something that would have been unthinkable just a few years ago. For Boeing, it's a reputational crisis that could undo years of painstaking recovery work and damage its standing with other major customers. The entire industry is watching closely, as this standoff could set a new precedent for how airlines and manufacturers negotiate, and how much leverage airlines can exert in future deals. What happens next will shape not just Ryanair and Boeing, but the future of aviation deals and the dynamics between airlines and aircraft makers worldwide. The stakes are enormous for both sides, with billions of dollars, thousands of jobs, and the reputations of two industry giants hanging in the balance. This is more than a contract dispute, it's a battle for leverage, survival, and the future direction of the global aviation industry. The outcome of this high-profile standoff could redefine how business is done in the skies, influencing negotiations and partnerships for years to come. Will Boeing bend to Ryanair's demands, or will Ryanair make the bold move to walk away and seek new partners? The answer to this question could change the aviation industry forever, setting the tone for a new era of airline manufacturer relationships. This isn't just about buying planes. It's about shaping the future of two giants in the aviation industry, whose decisions ripple across continents. Ryanair's order for up to 300 Boeing 737 MAX 10s is a fleet-defining move, one of the largest single airline orders in history. These larger, more efficient jets are key to Ryanair's ambitious growth, letting it fly more passengers at lower costs and expand into new markets. For Boeing, the deal is a lifeline, filling years of production slots and providing crucial validation for the MAX 10 after a turbulent period. Losing Ryanair would leave a massive gap in Boeing's order book, threatening jobs and future investments. The partnership goes far beyond aircraft sales. It includes decades of maintenance, pilot training, and parts contracts, creating a long-term relationship that benefits both sides. These after-sales services are a goldmine for Boeing, providing steady, high-margin revenue streams that last long after the planes are delivered. Ryanair's all-Boeing fleet keeps operations simple, training streamlined, and costs low, giving it a competitive edge. For Boeing, Ryanair is a showcase customer, proving the 737's reliability and performance to the world. If this partnership breaks down, both companies lose a foundation of their success, risking years of progress and trust. The ripple effects would hit supply chains, thousands of jobs, and the competitive balance in Europe's aviation sector. This is a make-or-break moment for both sides, with negotiations that could define their futures. The stakes are higher than just the sticker price of the planes. Reputation, strategy, and market share are all on the line. A split would force Ryanair to rethink its entire business model, from routes to fleet planning and even customer experience. For Boeing, it's a threat to its dominance in Europe, opening the door for rivals like Airbus to step in and reshape the market. If Ryanair cancels, Boeing faces a $30 billion hole in its future revenue. This loss would hit not just sales but also long-term service contracts worth billions more. Boeing's vast supplier network would feel the shock, risking job losses and production slowdowns. The company might have to offer steep discounts to fill empty production slots, eroding profits. Other airlines could demand similar deals, putting more pressure on Boeing's margins. The financial pain wouldn't be a one-off, it would linger for years. Boeing's ability to invest in new technology and compete with Airbus would be weakened. The loss of Ryanair could trigger a domino effect across the industry. For Boeing, this is more than a lost sale, it's a threat to its entire business model. The fallout could reshape the global aerospace landscape. Investors hate uncertainty, and the threat of losing Ryanair is a major red flag for Boeing's stock. A cancelled order could send shares tumbling and spark analyst downgrades. The story would dominate financial news, fueling a cycle of bad press and investor fear. Questions would swirl about Boeing's management and the future of the 737 MAX. If Ryanair, a savvy operator, is backing away, what does it know that others don't? This could spook other potential buyers and make selling the MAX even harder. The reputational damage could be as costly as the lost revenue. Lenders and bondholders might get nervous, raising Boeing's borrowing costs. For a company still rebuilding trust, this is a crisis of confidence. The market's reaction could shape Boeing's future as much as the deal itself. Is Ryanair's threat real, or just a high-stakes negotiation tactic? CEO Michael O'Leary is known for playing hardball, using public pressure to force better terms. By threatening to walk, he puts Boeing on the defensive, hoping for lower prices or faster deliveries. It's a classic game of chicken. Who will blink first? For Ryanair, the ideal outcome is a better deal, not a breakup. But if Boeing stands firm, Ryanair risks scrambling for alternatives and disrupting its growth plans. Both sides know the partnership is too valuable to lose. The likely result? A compromise, with Boeing offering concessions and Ryanair getting a sweeter deal. The public drama is part of the strategy. In the end, this is a negotiation played out on the world stage. The handshake will be quieter than the headlines, but the terms will shape the industry for years. Both Boeing and Ryanair face enormous risks in this tense standoff, with the future of their partnership hanging in the balance. If Boeing decides to give Ryanair a significant discount, it sets a dangerous precedent. Other airlines will quickly demand similar deals, which could slash profits across the entire 737 MAX program and undermine Boeing's pricing power for years to come. On the other hand, if Boeing stands its ground and loses Ryanair as a customer, it risks not only a major financial hit but also a blow to its reputation. This could open the door for Airbus to step in and strengthen its position in the market. For Ryanair, switching to Airbus isn't a simple fix. It would mean retraining thousands of pilots, overhauling maintenance operations, and facing much higher costs, both in time and money. The transition could drag on for years, stalling Ryanair's ambitious growth plans and giving competitors a chance to catch up or even overtake them in key markets. To make matters worse, Airbus production slots are already sold out for years ahead, so Ryanair wouldn't get new planes quickly, further delaying expansion. Regulatory hurdles and certification requirements would add even more delays and complexity, making the switch even riskier. Both sides are at risk of losing their competitive edge if they make the wrong move or misjudge the other's resolve. Years of progress and hard-won market share could be wiped out by a single misstep in these negotiations. This is truly a high-wire act, with no easy way out and every decision carrying enormous consequences for both companies. The outcome of this standoff will echo across the entire aviation industry, influencing future deals and shaping the competitive landscape. Each side must carefully weigh the short-term pain against the possibility of long-term survival and success. The stakes couldn't be higher, and the next move could define the future for both Boeing and Ryanair. This dispute isn't just about Ryanair and Boeing, it's a global chess match. The Boeing-Airbus rivalry is a flashpoint in US-EU trade tensions. If Ryanair jumps to Airbus, it's a symbolic win for Europe. But there's a new player, China's Comac, with its C919 jet. Ryanair has floated Comac as a future option, signaling to Boeing that the duopoly may not last. While Comac isn't ready for Europe yet, the threat is real and strategic. A big Western order would boost China's aerospace ambitions and shift the balance of power. The Ryanair-Boeing saga is now part of a bigger story: global competition and industrial pride. Boeing's ability to keep Ryanair is about more than business, it's about influence. The outcome could shape the next era of aviation competition. The world is watching who blinks first. The Ryanair-Boeing standoff could reshape global aviation. If Ryanair wins concessions, other airlines may follow, squeezing manufacturers' profits and shifting power to buyers. If the deal collapses, Ryanair's struggles could warn others against abandoning single-fleet strategies. A move to COMAC would accelerate China's rise and challenge the Boeing-Airbus duopoly. For Boeing, this is a test of resilience and leadership. The outcome will influence suppliers, investors, and competitors worldwide. The stakes are massive for both companies and for the industry. This is more than a business dispute, it's a window into the pressures of the modern global economy. The shockwaves will be felt in every corner of aviation. What happens next could affect the planes you fly and the price you pay. In the skies, as on the ground, the balance of power is always up for grabs.